Based on the provided information for Bitcoin, the strategy will adopt a short-term bearish perspective. The recent price fluctuations show a downward trend, and the forecast predicts a continued decline over the next week. The current price hovering around $97.000 is close to the resistance level of $96, $580.69. This suggests a potential for a pullback towards the support level of $91, $968.57. Therefore, the investment strategy recommends entering a short position at the current market price of approximately $97.000. A stop-loss order should be placed at $97.700 to limit potential losses if the price unexpectedly surges. The target price for this short position is set at $94.700, aiming to capitalize on the anticipated downward movement. This strategy aims to profit from the short-term bearish momentum in Bitcoin, taking advantage of the price decline towards the support level. Given the provided price history, forecast, and support/resistance levels for Bitcoin Cash, a cautious short-term investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines. The historical prices suggest a potential support level around $440.1, while the resistance level is at $463.20. This indicates a bearish outlook in the short term, making a short position potentially profitable. To implement this strategy, an entry price of $455 could be considered, aligning with the current price and the forecasted decline. A stop loss should be set at $463.20 to limit potential losses if the price unexpectedly rises. The target price could be set at $440.1, the identified support level, aiming to capture the anticipated downward movement. This strategy prioritizes risk management by setting a stop loss and focuses on capitalizing on the short-term bearish trend. Given the price trends and forecast for stacks, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $1.637 indicates a potential floor for the price, while the resistance at $1.802 suggests limited upside potential. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.75 could be considered, aligning with the forecasted price and allowing for some room for price fluctuation. The stop loss should be set at $1.80 to protect against any unexpected price recovery. The target price should be set at $1.60, slightly above the support level, allowing you to take profits before the market hits major support. Based on the historical price data and the forecast for Ethereum, a short-term bearish strategy appears to be the most suitable. The historical prices show a downward trend, with the recent price hovering around the support level of $3,282.98. The forecast predicts further declines, reaching as low as $3,330. This indicates a high probability of a continued downward movement in the short term. Therefore, I recommend taking a short position on Ethereum. A good entry price would be around $3,410, aligning with the recent price action and the forecast. The stop loss should be set at $3,470 to mitigate potential losses if the price unexpectedly reverses. The target price could be set at $3,280, aiming to capitalize on the predicted decline towards the support level. This short-term strategy allows for potential profit from the anticipated downward movement in Ethereum while minimizing risk through a well-defined stop loss. The provided price information for Ripple suggests a potential for short-term growth. While the historical prices show some volatility, the recent upward trend and the forecast indicating a rise towards $2.51 present an opportunity for a bullish strategy. Given this outlook, a long position on Ripple appears to be a suitable approach. To implement this strategy, an entry price around $2.37, the current lowest point in the recent price history, would be advantageous. A stop-loss order could be placed at $2.25, slightly below the recent low, to limit potential losses. The target price should be set at $2.51, aligning with the highest forecasted price, allowing for a potential profit of approximately 6%. This strategy capitalizes on the anticipated upward movement of Ripple in the short term while managing risk through a well-defined stop-loss. Based on the provided information about Binance Coin, a medium-term investment strategy appears to be the most suitable. The historical price data shows a general upward trend, but with recent fluctuations. The forecast suggests a slight dip followed by a potential recovery. Considering this, entering a long position around the support price of $659.60 could be a good strategy. Setting the stop-loss slightly below the support price at around $655 would protect against significant downside risk. The target price could be set at $720, aligning with the recent resistance level and the forecast's upward trajectory. This strategy allows for potential profit from the anticipated price recovery while managing risk with a defined stop-loss. Given the price trends and forecast for Stellar, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent downward movement, while the forecast suggests further declines. The support price sits at $0.3557, indicating a potential floor for the price. However, the resistance at $0.3957 suggests limited upside potential. Considering these factors, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.385, slightly above the current price, allows for a small buffer while still positioning for a potential drop. The stop-loss should be set at $0.395 to limit potential losses if the price unexpectedly rises above resistance. The target price should be set at 35 cents, aiming to capture a portion of the projected decline before reaching the support level. This strategy prioritizes risk management and aims to capitalize on the short-term bearish outlook for Stellar. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and below the resistance level of $6.40. The support price is at $5.214, indicating a potential floor for the price. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $5.60 would be ideal, aligning with the forecasted price and providing a buffer above the current price. The stop-loss should be set at $5.75 to protect against any unexpected price recovery. The target price should be set at $5.15, slightly above the support price, allowing you to take profits before the market hits major support at $5.214. This strategy aims to capitalize on the anticipated decline in prices while managing risk through a defined stop-loss order. Given the provided price history and forecast for Cardano, a cautious short-term investment strategy appears most suitable. The historical price data exhibits volatility, with a recent downward trend. The forecast suggests continued downward pressure, with prices potentially dropping towards the support level. Therefore, a short position is recommended. An entry price around $0.968, near the recent low, offers a good opportunity to initiate the trade. The stop-loss should be set at 98 cents to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.885, aligning with the forecast's lowest projection. This strategy capitalizes on the anticipated downward movement while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Litecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent decline, with the current price near its support level of $99.80. The forecast indicates further slight declines over the next week. While there is a possibility of a rebound, the short-term outlook suggests a bearish trend. Therefore, a short position seems more appropriate to capitalize on the anticipated price decrease. An aggressive short-term investment strategy would involve entering a short position at $106, the current price close to the recent high. The stop loss should be placed at $108, slightly above the entry price, to protect against unexpected price increases. The target price could be set at $99.50, aligning with the support level and allowing for a decent profit margin. This strategy aims to profit from the expected price decline while managing risk through a well-defined stop loss. Based on the provided Doge-Coin price information, a short-term bullish investment strategy appears promising. The historical price data reveals a generally upward trend, with recent fluctuations around the $4.50 level. The forecast indicates a continued upward trajectory, suggesting potential for further price appreciation. Considering this positive outlook and the relatively low volatility, a long position is advisable. To execute this strategy, an entry price of $4.40 could be considered, allowing for some room to absorb potential minor price dips. A stop-loss order should be placed at $4.30 to limit potential losses in case the price unexpectedly reverses. The target price could be set at $4.80, capitalizing on the projected price increase and providing a healthy profit margin. This short-term strategy aims to capitalize on the anticipated upward momentum of Doge-Coin within the next week. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend, with the current price close to the support level of $9.22. The forecast suggests Aptos could drop further in the coming week. In this scenario, a short position is advisable to potentially profit from the anticipated decline. For a short-term investment strategy, an entry price of $9.66 would be ideal, aligning with the current price and offering a margin for potential price movements. The stop loss should be set at $10, slightly above the entry price, to protect against any unexpected price surges. The target price should be set at $9.22, aligning with the support level, allowing you to take profits before the market potentially rebounds. Based on the provided historical price data and the forecast for SE, a cautious short-term investment strategy is recommended. The price has been steadily declining over the past few weeks, and the forecast suggests continued downward movement. The support price at $0.4185 indicates a potential floor for the price, while the resistance at $0.5315 suggests limited upside potential. Given this bearish outlook, a short position is advisable to capitalize on the anticipated decline. To implement this strategy, an entry price of $0.450 could be considered, slightly above the current price and below the forecast. A stop-loss order should be placed at $0.473 to limit potential losses if the price unexpectedly reverses. The target price could be set at $0.4185, aligning with the support level and allowing for a reasonable profit margin. This short-term approach aims to capitalize on the current downward trend while minimizing risk through a well-defined stop-loss order. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within the current range. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $25.98 and resistance at $29.43 suggest that Ethereum Classic is likely to remain within this range in the short term. Therefore, a short position is advisable for a short-term investment strategy. An entry price of $27.50, slightly above the current price, would allow for some room for price movement before entering the trade. The stop loss should be set at $28.50 to protect against unexpected price surges, while the target price could be set at $25, aiming to profit from the anticipated decline towards the support level. Based on the provided Polygon price information, a cautious investment strategy is recommended. The 2-week price history reveals a clear downward trend, with the forecast further predicting a decline over the coming week. The historical prices show a consistent downward movement, reaching as low as $0.477 in the recent past. While the support price sits at $0.4733, the forecast suggests prices could fall below this level, indicating a potential for further losses. Therefore, a short position on Polygon is advisable for a short-term investment horizon. An entry price of $0.517 aligns with the current price and allows for potential profit as the price moves towards the forecast lows. A stop loss should be set at $0.535 to limit potential losses if the price unexpectedly rises. The target price should be set at 48 cents, slightly above the support level, allowing for profit taking before the price potentially reaches its lowest point. This strategy capitalizes on the prevailing bearish trend while managing risk through a well-defined stop-loss order. Based on the provided price information for AEVO, a cautious short-term investment strategy appears suitable. The historical price data reveals a downtrend, with the forecast indicating further declines. The forecast suggests a price drop from the current level to approximately 35 cents. Considering the support price at $0.3512, this presents a potential buying opportunity if the price dips to this level. However, given the bearish outlook and the potential for further price drops, it is advisable to adopt a short-term approach. An entry price of 40 cents, slightly above the resistance price, could be considered, with a stop loss at 41 cents to minimize potential losses. The target price should be set at 36 cents, aiming to capitalize on the predicted price decline. This strategy allows for potential profits while mitigating risk by exiting the position before the price reaches the support level. Based on the provided information for optimism, a short-term investment strategy appears to be the most suitable approach. The price history reveals a downward trend, and the forecast indicates further declines in the coming week. While the support price sits at $1.777, the current price is hovering above it, suggesting potential for further downward movement. Therefore, an aggressive short-term strategy would involve opening a short position at the current price of $1.91. A stop-loss order should be placed at $2.16 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $1.777, aiming to capitalize on the projected decline towards the support level. This strategy allows for quick profit taking if the forecast proves accurate while mitigating risk through the stop-loss order. Based on the provided price history and forecast for STRK, a cautious short-term investment strategy is recommended. The price history demonstrates a clear downward trend, with recent price points consistently falling below previous levels. This trend is further supported by the price forecast, which predicts continued decline over the next week. Considering this bearish outlook, a short position is advisable. An entry price of $0.495 aligns with the current price and the forecast, while a stop loss at $0.526, slightly above the recent resistance level, would limit potential losses. A target price of $0.4661, the support price, offers a reasonable profit potential while allowing for some room for price fluctuation. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop loss. Based on the provided Solana price information, a cautious investment strategy is recommended for the medium term. The historical price data reveals a downward trend over the past 2 weeks, with the forecast suggesting further declines in the coming week. While the support price of $180.52 provides a potential floor, the resistance level of $216.43 indicates a significant barrier to upward movement. Given this context, entering a short position appears more promising than a long position. Therefore, a suitable strategy involves entering a short position at the current price of approximately $194, with a stop loss set at $200 to mitigate potential losses. The target price should be set at $175, aligning with the forecast and allowing for a reasonable profit margin. This medium-term approach aims to capitalize on the anticipated downward trend while minimizing risk through a well-defined stop loss. Based on the provided price data for Jupiter, a bearish short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts further declines in the coming week. The price is currently hovering near the resistance level of $0.9273, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, with a stop loss set at 95 cents to limit potential losses if the price unexpectedly surges. The target price could be set at 80 cents, aligning with the forecasted lowest price, allowing for potential profits from the anticipated price decline. This strategy capitalizes on the short-term bearish outlook indicated by the price history and forecast for Jupiter. Given the price trends and forecast for Render, a cautious investment strategy focusing on a short-term approach is advisable. The historical prices demonstrate a downward trend, with the forecast projecting further declines. The forecast suggests Render could drop from its current price to as low as $7.34, while the support price sits at $7.185 and resistance at $7.782. This indicates a bearish outlook in the short term. Therefore, a short position is recommended to capitalize on the anticipated decline in prices. An entry price of $7.59, aligning with the first forecast price, would be suitable. The stop loss should be set at $7.782, the resistance level, to protect against any unexpected price surge. The target price should be set at $7.185, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to minimize risk while maximizing potential returns in the short term. Based on the provided information for Solana name service, a cautious investment strategy with a short-term perspective appears most suitable. The 2-week price history exhibits a downward trend, and the forecast indicates further declines over the next week. Although the support price sits at $0.2484, the current price is hovering near the resistance level of $0.2719, suggesting a potential for a pullback. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price around $0.265, slightly above the current price, allows for some buffer against potential fluctuations. The stop loss should be set at $0.272, just above the resistance level, to minimize potential losses if the price unexpectedly surges. The target price can be set at $0.253, aligning with the lower end of the forecast range, allowing for a reasonable profit margin before the price potentially reaches the support level. Based on the provided Doge-Coin price information, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with a general downward bias. The forecast further reinforces this bearish outlook, projecting a decline in price over the next week. Considering these factors, a short position is recommended. An entry price of $0.390 aligns with the current price and the downward trend. A stop loss at $0.408, slightly above the recent high, protects against unexpected price surges. The target price is set at $0.320, aiming to capitalize on the projected price decline while respecting the support price of $0.16992. This strategy prioritizes risk management while seeking to profit from the anticipated price movement. Based on the provided PEPE price information, a cautious investment strategy would focus on a short-term approach. The historical prices demonstrate a clear downward trend, with the recent forecast suggesting further declines. Although the support price is at $0.0000183, the resistance is at $0.0000204, indicating a lack of strong upward momentum. Considering this bearish outlook, a short position appears more suitable. To execute this strategy, an entry price of $0.0000195 could be considered, aligning with the current price and the forecasted decline. The stop loss should be set at $0.0000204 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000183, aiming to profit from the predicted drop towards the support level. This approach allows for capitalizing on the potential short-term price decline while managing risk effectively. Given the provided price history and forecast for SHIB, a cautious short-term investment strategy appears most suitable. The recent price history shows a downward trend, with the forecast indicating further declines in the coming week. The current price is hovering near the support level of $0.0000169, suggesting a potential for further downward movement. Therefore, a short position on SHIB is recommended. An entry price of $0.0000217, aligning with the current price, would be appropriate. A stop loss should be placed at $0.0000225 to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $0.0000180, aiming to capitalize on the anticipated decline towards the support level. This strategy allows for a potential profit while mitigating risk by setting a defined stop loss. Based on the provided information for Dog with Hat, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend, with the recent price significantly below its peak. The forecast further indicates a continued decline in the coming week. Considering the support price at $1.888 and the resistance at $2.309, it seems unlikely that Dog with Hat will experience a significant upward surge in the near future. Therefore, a short position on Dog with Hat is recommended. An entry price of $2.07, aligned with the current price and the beginning of the forecast decline, would be appropriate. A stop loss at $2.11, slightly above the first forecast price, would limit potential losses if the price unexpectedly rises. The target price should be set at $1.92, aiming to capture some of the anticipated downward movement while remaining conservative. Given the price trends and forecast for Doge-Coin, a conservative investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price close to its forecast and near the support level. The resistance is at $0.006825, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a conservative short-term investment strategy, an entry price of $0.00666 would be ideal, aligning with the recent price action. The stop loss should be set at $0.006825 to protect against any unexpected price recovery. The target price should be set at $0.006234, slightly above the support level, allowing you to take profits before the market potentially rebounds. This strategy aims to minimize risk while still aiming for modest gains in the short term. Based on the provided price information for NEAR protocol, a bearish investment strategy appears more suitable. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines. The support price at $5.018 and resistance at $5.694 suggest a limited upward potential. Considering this bearish outlook, a short position would be advisable to capitalize on the anticipated price decrease. For an aggressive short-term investment strategy, an entry price of $5.40 would be ideal, aligning with the current price and allowing for potential profit as the price moves towards the support level. The stop loss should be set at $5.60 to protect against any unexpected price recovery. The target price should be set at $4.90, slightly above the support price, allowing you to take profits before the market hits major support. Based on the provided Internet Computer price history and forecast, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting continued declines in the coming week. The support price at $9.246 indicates a potential floor for the price, while the resistance at $12.035 suggests limited upside potential. Given this outlook, a short position is deemed more suitable. An entry price of $10.50 would allow for capturing potential downside movement while mitigating risk. The stop loss should be placed at $11 to protect against unexpected price surges. The target price can be set at $9.50, aiming to profit from the anticipated decline towards the support level. This strategy emphasizes a cautious approach, capitalizing on the short-term bearish trend while minimizing potential losses. Based on the provided injective price history and forecast, a cautious short-term investment strategy is recommended. The 2-week price change shows a downward trend, with the forecast predicting further declines. While the support price at $20.43 offers a potential floor, the resistance level at $23.12 suggests limited upside potential in the near term. Therefore, a short position on injective appears to be the most suitable strategy. An entry price around $22, aligning with the forecast, would allow you to capitalize on the anticipated decline. To manage risk, a stop-loss order should be placed at $23, above the entry price to limit potential losses. The target price could be set at $20.50, slightly below the support price, aiming to capture a portion of the predicted price drop. This strategy prioritizes risk management while seeking to profit from the prevailing bearish momentum. BTC's historical price data reveals a downward trend over the past 2 weeks, with the forecast suggesting further declines in the coming week. This bearish outlook, coupled with the price being close to the support level of $480.70, indicates a potential opportunity for a short position. A conservative investment strategy would involve entering a short position at the current price of around $455, with a stop-loss placed slightly above the recent high of $484 to limit potential losses. The target price for this short position could be set at $448, aligning with the forecast's lowest predicted price and providing a reasonable profit margin. This strategy capitalizes on the anticipated decline in BTC's price while managing risk through a well-defined stop-loss. The medium-term outlook for BTC remains uncertain, making it prudent to avoid long-term investments at this juncture. Given the price trends and forecast for THETA network, a short-term investment strategy appears to be the most suitable. The historical price data shows a recent downward trend, with the price currently hovering around $2.30. The forecast indicates a continued decline over the next week, with prices potentially dropping to around $2.35. Considering the support price at $1.534 and the resistance price at $2.604, entering a short position at $2.34 appears to be a prudent decision. The stop-loss should be set at $2.40 to protect against any unexpected price surges. The target price could be set at $2.15, aiming to capitalize on the anticipated price decline towards the support level. This strategy allows for potential profit from the short-term bearish outlook while minimizing risk with a well-defined stop-loss. Based on the provided price history and forecast for WorldCoin, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a downtrend, with recent fluctuations hovering around the lower end of the range. The forecast further reinforces this bearish sentiment, projecting a continued decline in price over the next week. This suggests that the market is currently in a phase of selling pressure, making a short position potentially profitable. An aggressive short-term investment strategy would involve entering a short position at the current price of approximately $2.22. The stop-loss order should be placed at $2.32 to limit potential losses if the price unexpectedly rallies. The target price for this strategy would be set at $2.177, aligning with the support price identified in the data. This approach capitalizes on the anticipated price decline while minimizing risk through a well-defined stop-loss order. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to the forecast and near the support level. The resistance is at $0.5071, indicating limited upside potential. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of 45 cents would be ideal, aligning with the forecasted price. The stop-loss should be set at 47 cents to protect against any unexpected price recovery. The target price should be set at 38 cents, slightly above the support price, allowing you to take profits before the market hits major support at $0.3798. This strategy aims to minimize risk while still capitalizing on the potential for price decline. Artificial Superintelligence Alliance shows a clear downward trend in its 2-week price history, with the forecast indicating further declines. The support price sits at $1.254, while the resistance is at $1.371. This suggests a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at the current price, around $1.30, with a stop loss set at $1.371 to protect against any unexpected price rallies. The target price should be set at $1.254, the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the downward momentum and potential for further price decline in Artificial Superintelligence Alliance. Remember that this is just a suggestion based on the provided data and does not constitute financial advice. It's crucial to conduct thorough research, consider your risk tolerance, and potentially consult with a financial professional before making any investment decisions. Given the provided price information for Polkadot, a cautious investment strategy is recommended. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price is at $5.799, the resistance price is at $7.711, suggesting a limited upside potential in the short term. Therefore, a short-term short position is advisable. An entry price of $7 would allow you to capitalize on the anticipated price decline. A stop loss at $7.28 would protect against any unexpected upward movement. The target price should be set at $6.50, aiming to capture a portion of the potential downward movement before the price potentially finds support at $5.799. This strategy prioritizes risk management and seeks to capitalize on the current bearish sentiment surrounding Polkadot. The provided historical price data and forecast for Filecoin suggest a bearish trend in the short term. The price has been steadily declining over the past 2 weeks, and the forecast predicts further drops in the coming week. Given this trend, a short position on Filecoin seems to be the most suitable strategy. To execute this strategy, we can enter a short position at the current market price, which is around $5.11. We should set a stop-loss order at $5.21 to limit potential losses if the price unexpectedly rises. The target price for this trade could be set at $4.83, aligning with the support price and allowing for a reasonable profit margin. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss order. Given the provided price history and forecast for Conflux, a short-term bearish investment strategy is recommended. The price history reveals a consistent downward trend over the past 2 weeks, with the forecast predicting further declines. The support price sits at $0.1398, while the resistance is at $0.1773. This suggests that the downward momentum is likely to continue in the short term. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current price, around 16 cents. The stop loss should be set at $0.1773, above the current price and resistance level, to minimize potential losses if the price unexpectedly rises. The target price would be $0.1398, aligning with the support level, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish sentiment and aims to profit from the potential drop in Conflux's price in the coming days. Based on the provided data for Ethereum name service, a medium-term investment strategy appears most suitable. The historical price shows a slight upward trend, with recent fluctuations around the $37 price level. The forecast predicts continued stability around this level, suggesting a sideways movement in the short term. Therefore, a long position is recommended, aiming to capitalize on potential upward momentum within this range. The entry price should be set at $37, aligning with the current price and the forecast. A stop loss of $34, slightly below the support price, protects against significant downside risk. The target price should be set at $43, aiming to capture a substantial portion of the potential upside before reaching the resistance level. This strategy allows for a balanced approach, considering both the short-term stability and the long-term upward potential of Ethereum name service. Based on the provided information for Avalanche, a cautious investment strategy would be advisable. While the historical prices show some volatility, the forecast indicates a potential decline in the coming week. The price is currently hovering near the support level of $36.58, suggesting that further downward movement could be imminent. Therefore, a short position would be recommended to capitalize on this potential decline. An entry price around $40, slightly above the forecast low, would allow for some buffer against unexpected price fluctuations. The stop loss should be set at $42 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $37, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management and aims to generate modest returns by capitalizing on the short-term bearish outlook. First, based on the provided BTC price history, forecast, and support/resistance levels, a short-term bearish strategy appears more suitable. The historical prices show a downward trend, and the forecast further predicts a decline in price. The current price is near the resistance level, suggesting a potential for a pullback. Therefore, a short position on BTC is recommended. An aggressive entry price could be around $0.0560, aligning with the recent price action and the forecast. A stop loss should be placed at $0.0580 to protect against unexpected upward movement. The target price could be set at $0.0470, considering the forecast and aiming to capture potential downside movement towards the support level. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Based on the provided data for PENDLE, a cautious short-term investment strategy appears most suitable. The 2-week price change shows a mixed trend, with a slight downward bias. The forecast predicts further price decline in the coming week, suggesting a bearish outlook. Although the support price is relatively low at $4.837, the resistance is at $5.719, indicating limited potential for a significant upward movement. Given these factors, a short position on PENDLE is recommended for a short-term investment horizon. An entry price around $5.20 would allow for capitalizing on the anticipated price decline. The stop loss should be set at $5.40 to minimize potential losses if the price unexpectedly rises. The target price could be set at $4.90, aiming to profit from the predicted downward movement. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish trend. Based on the provided data for the sandbox, a cautious investment strategy leaning towards the short term is recommended. The 2-week price history demonstrates a downward trend, with the forecast suggesting further declines. While the support price at $0.5523 offers a potential floor, the resistance at $0.6098 indicates limited upward movement in the near future. Considering this outlook, a short position on the sandbox appears more favorable. An aggressive entry price could be around $0.600, aiming to capitalize on the potential price drop towards the support level. A stop loss order should be placed at $0.610 to mitigate risk in case of an unexpected price surge. The target price could be set at $0.560, allowing for a reasonable profit margin while avoiding excessive risk exposure. This strategy aims to capitalize on the short-term bearish trend while managing potential losses effectively. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The price has dipped below its support price of $0.4683, suggesting a potential for further downward movement. The resistance level at $0.5197 is relatively distant, indicating limited upside potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.485 would allow you to enter the trade at a relatively low point. The stop loss should be set at $0.505 to protect against any unexpected price recovery. The target price should be set at 45 cents, slightly below the support level, allowing you to take profits before the market potentially finds a new bottom. This strategy allows for potential gains while mitigating risk by setting a clear stop loss. Given the price trends and forecast for ENG coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast suggesting further declines. The current price is near the resistance level of $0.2457, indicating potential for a pullback. The support price sits at $0.1535, suggesting a floor for the price. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.240 would allow you to enter the short position near the resistance level. The stop loss should be set at $0.250 to protect against any unexpected price recovery. The target price should be set at $0.220, aiming to capture a portion of the potential downside before reaching the support level. This strategy allows for a short-term profit opportunity while minimizing risk. Uniswap shows a fluctuating price history with a recent downward trend. The forecast predicts a slight recovery in the coming week. Considering these factors, a short-term investment strategy with a focus on the long side seems appropriate. The entry price should be set at $13, aligning with the current price and the potential for a price rebound. The stop loss can be placed at $12.784, the support price, to minimize potential losses. The target price should be set at $14.803, the resistance price, to capitalize on the potential for a price surge. This strategy aims to profit from the anticipated price recovery within the short term. Given the price trends and forecast for Chainlink, an investment strategy focusing on a short-term approach seems most suitable. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation around the $25 price point. The support price is at $22.09, indicating a potential floor for the price, while the resistance is at $24.94, suggesting an upper limit for the near future. This suggests a range-bound movement in the short term. Therefore, a strategy focusing on a short-term investment perspective with a neutral to slightly bullish stance is recommended. An entry price around $23 could be considered, allowing you to capitalize on any potential upward movement towards the resistance level. The stop loss should be placed slightly below the support price, at $22.10, to minimize potential losses. The target price could be set at $24.80, aiming to capture a significant portion of the potential upside within the predicted range. This strategy allows you to participate in the potential upside while managing risk effectively within the expected price range. Based on the provided Aave price information, a medium-term investment strategy appears promising. The historical price data reveals a fluctuating trend with a general upward bias. The forecast indicates continued upward momentum, suggesting a potential for price appreciation over the next few weeks. Considering this outlook, a long position in Aave is recommended. An aggressive entry point could be around $320, allowing for potential gains as the price moves towards the forecast high of $420. To manage risk, a stop-loss order should be placed at $300, protecting against unexpected price drops. The target price could be set at $390, aiming to capitalize on a significant portion of the anticipated price increase while allowing for some room for further growth. This strategy balances risk and reward, capitalizing on the bullish outlook while mitigating potential losses. Given the provided price history and forecast for EOS, a short-term investment strategy appears most suitable. The historical data reveals a fluctuating price trend, with recent dips indicating potential bearish momentum. The forecast further supports this outlook, projecting a decline in price over the next week. Considering this bearish sentiment, a short position is recommended. An aggressive entry point could be around $0.847, aligning with the recent price dip. A stop loss should be placed at $0.9011, the resistance level, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.7837, the support level, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish trend while managing risk through a well-defined stop loss. Based on the provided Tron price history and forecast, a short-term investment strategy appears to be the most suitable. The historical data shows a fluctuating price pattern, with recent declines indicating a potential bearish trend. The forecast also suggests a downward movement in the coming week, further supporting this bearish outlook. Given this, a short position is recommended to capitalize on the anticipated price decline. An ideal entry price would be around $0.258, aligning with the resistance level and recent price action. The stop loss should be set at $0.269 to protect against unexpected upward movements. The target price could be set at $0.244, slightly above the support price, allowing for potential profit-taking before the price reaches major support. This strategy focuses on short-term price fluctuations and aims to capitalize on the potential downward momentum in Tron. Based on the provided price history and forecast for Suncoin, a cautious investment strategy with a short-term perspective appears most suitable. The historical price data reveals a fluctuating trend, with recent prices hovering around the support level. The forecast suggests a slight downward trend over the coming week, indicating potential for further price decline. Given this outlook, a short position on Suncoin is recommended. An entry price near the current market price, around $0.0214, would be appropriate. A stop loss order should be placed slightly above the recent high of $0.0235 to minimize potential losses from unexpected upward movements. The target price could be set at $0.0206, aligning with the support level and providing a reasonable profit margin if the forecast holds true. This strategy aims to capitalize on the anticipated short-term price decline while managing risk through a well-defined stop loss order.